Richard Fetyko right now. Julie, just stay on the conference call and keep us up to date about it. Richard Fetyko, he follows Google for Merriman Curhan Ford, and he's among the top-rated analysts on the company. He's got a buy rating on Google stock. Richard Fetyko, you've been listening into the conference call, hearing about the management changes. Before we talk a little bit about Eric Schmidt and Larry Page, how does Google expect to make money with this Android operating system? I understand that there are 300,000 activations daily, but 90% of their business is still search. How do you make money giving away the operating system?
That's a good question. The way they expect to make money is basically by stimulating the smartphone adoption. Smartphone users typically very sort of heavy users of mobile data, mobile browsing, mobile searching. And if you notice, on every one of these Android devices, Google searches by, the default search. So indirectly, they benefit from the Android adoption through their core search business, through the search advertising platform.
So it's still going to be the focus on search. I mean, it's not as if they get a certain number of Android activations and they flip a switch on a business model that we've never heard of before.
Not at this point. It could be some Trojan horse, strategy at some point when they have critical mass. They'll perhaps demand certain fees from the handset manufacturers or carriers. But at this point, that hasn't been talked about at all. At this point, it's just purely stimulating the growth in mobile data usage, mobile search usage. The AdMob acquisition that they made last year is also part of the mobile strategy, but not necessarily dependent on the Android adoption.
Richard Fetyko, what about the shares of Google? Do you think that they're going to go higher?
Yeah, we continue to like the shares, into the $700 or so dollar range. It's really just looking at, if you look at sort of the earnings growth of 20% plus and about $35 in earnings in 2011, give it a one peg at 20 times that number, you're looking at a $700 stock. It's a very gross way of looking at it. There's, of course, discounted cash flow analysis that we have backing up the same range. But, yeah, we continue to like it. I mean, their fourth quarter numbers support the fact that as e-commerce growth has accelerated in the fourth quarter and consumers are shopping more aggressively online, the advertisers tend to follow and get more aggressive at grabbing the consumer's share of the wallet.
All right, I want to thank you very much, Richard Fetyko, coming to us from Merriman Curhan Ford, an analyst following Google. The shares up 2% in after-hours trading.